And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down stocks, commodities, currencies, anything in our mind, including economics, market news, company news, corporate news, and yes, even sometimes political news if it affects the market, and kind of analyze it all out there for you guys and give you a take so that you can better run your daily routine. If you've been a member of our community a long time, you can tell, Coach Tim over here is losing his voice, had a little bit of a cold, so I'm not going to make this intro too long. Going to bring my crew in here. Maddie, how you doing, sir?
You know, Tim, I think I'm getting now sick because of you, so thank you for that.
Oh, you're welcome. I mean, that's the way it goes.
You know what? These kids, these stinking kids, I have not been sick for 6 months. Kids go back to school for 1 week, and now I'm sick.
Now you got a cold? I got a cold.
Yeah. But I know who patient number one is on this one.
I do too.
We do have patient zero, isn't it?
Yeah, I know patient zero.
What they call?
I know patient zero.
I don't know who patient -1 is though. I don't know where she got it, but yeah,
we don't need to talk about that one.
It is what it is. Yeah, Maria, I definitely am losing my voice. I'm going to have that raspy old voice from like the 30s or something like that. But we're going to break down the markets one step at a time, regardless, and we're going to have some fun while we're doing it. You're right though, Matt. How long has it been since parents have been complaining about kids getting them sick? Because they all go to school, they get that little virus, they bring it home. It is what it is. We're dealing with it right now. By the way, what we're also dealing with is the first bounce in the market now for in the last 4 days. We've got earnings on Slack, earnings on Lulu. We've got some conversation around the AstraZeneca vaccine candidate, which I actually had a setback here today. We'll get Cody's take on that. Let's start with the technical read though on the broad markets, Matt. S&P 500. What are you seeing here on that candle?
Yeah, looking at this from a charting perspective, what we've been talking about for really since this retracement, and that's kind of what I see this as of right now, as a retracement. It certainly could spin into something else. There is a risk in that, no doubt about that. But as we've talked about in retracements, and this is not something new to retracements, but when you're going through some type of pullback, retracement, correction in the market, however you personally want to categorize it from a language perspective, you're always looking at it from a support level. Where is that support level where the market could form? And that's when you're talking about traditional technical catalyst of support, significant whole numbers, moving averages, Fibonacci retracement numbers, extended trend lines, and so on and so forth. That first support level we looked at was really kind of in that 20-day moving average versus the 3,400 horizontal support level. And obviously looking at it 2 days ago, which would have been Friday last week, you kind of came through that fairly aggressively. And then over yesterday, we broke it down fairly extensively from a technical perspective on an intraday perspective, talking about, how we, need to see slowing momentum and how that slowing momentum is the first indication, but it's not slowing momentum in a downward movement in price is simply consolidation to a certain extent. And so you still have an edge to the downside in that. And then when you break support here, obviously you gap down on the futures and then you start to recover here. The question that I think everybody has from a technical perspective here is it certainly has found support on that daily chart at the 50-day moving average. But does it have follow through here? And I think that's the one question that all of us are trying to understand is, where is that confirmation? Where's that confirmation that to where we all have confidence in that upward movement in price? The one thing we typically like to see in these downward movements in price that we see in retracements is you typically like to see decreasing volume. And what you have here over the last 3 days before the recovery, and you're going to get good volume on this candle throughout the rest of the day as well. But what you like to see typically is a decreasing volume environment. What we've gotten is a fairly aggressive increase in volume on the sell-off. So that gives you a little bit more pause for concern, but at the same time, you're still looking at this as positive. We talked about it yesterday, during the sell-off, that you're looking at this as a buying opportunity, but you have to be very, very, very conservative and cautious before you start moving in aggressively. Can you dip your toe in? Certainly, you can dip your toe in. There's nothing wrong with that. We talked about that quite extensively yesterday. But I still think before you get aggressive in anything, I still think you're waiting for confirmation here. You have a fairly deep pullback here. I think in the NASDAQ specifically, Wasn't it the quickest 3-day correction we've ever seen? Or not
It's a
3-day
record.
correction, but
It was the
quickest correction?
quickest. I mean, you think about that statement, the quickest 10% correction in the history of the index.
Yeah.
And you know what?
Congratulations, 2020. You know,
It's not going to be the last one that's the quickest.
nope.
Okay, that is the new market environment we're dealing with. You're going to see records to the top side. You're going to see records to
and
the
this is the
downside.
craziness. And that quickest 10% correction took us all the way back to mid-August prices. I mean, like, it just it is
works
so
both ways.
surreal when you think about it. It's like, because like normally a 10% correction in a historic context would be this like giving up months of gains, right? You gave up a couple weeks of gains. It's absolutely just it's 2020.
Correct. I mean, that 2020 thing is definitely real, but I think Matt's right, though. It's going to be continuing moving forward as well. I mean, if you think about the nature of the markets that we're in, Mark, those melt up type of markets can create vacuums like this for those quick 10% corrections. We came right down, found the 50 period moving average, found a support test here, Matt. Nice green candle. There's no question about it. If you're a bullish trader, this is the start of a development that you want to see. But individual patterns aren't even as clean as even the index here. I got to tell you. I mean, if you look at some of the biggest names, I mean, you looked at them yesterday, Matt, but it's not like every one of them are patterns that I'm getting excited about. Look at Microsoft, you know, one of the biggest names in the market. You know, I look at their deep retracement. I'm like, okay, now could it still rally and get back above 220 and give me some clarity? Sure. But it's not as clean as the NASDAQ. I like Apple. I love the Apple retracement. If I'm a bull and I'm targeting something, I might be interested in this one confirming back above those two little moving averages, about that 120 mark or so, yesterday's intraday highs. So there is some opportunity here. There's no question about it, Matt, but we cannot claim victory for the bulls yet, as we don't have that confirmation on those candles yet. You know, so you got the 1 day, you got the 1 day support bounce in the 50-day test, but we're not necessarily out of the woods yet here, are we?
No, one day historically does not mean that's a pivot, right? And this is what is difficult when you're analyzing it from a technical perspective on retracements, is you get that 1 day pivot and you think, oh, there's that support level. Well, historically, it's actually 3 days to actually confirm that as a traditional pivot of support. And so you never wait for that with retracements. You're really looking at that second day as confirmation, even knowing full well that it takes 3 days to fully confirm the pattern. But you know, and that's what's difficult about retracements versus breakouts. Whereas, you know, on a breakout, you're looking at that 1 day, it breaks out of the channel, you're like, let's fly. On retracement, you got a little bit of a different psychology going on, because the price is coming down, and you're waiting for that buying opportunity on the dip. And so it's a little bit of a different analysis, no doubt about that. Again, it's what you want to see. You want to see that 50-day moving average hold as a bull, no doubt about that. But I don't think I think anybody that is celebrating, saying, "Oh, buy opportunity, buy this, buy that, buy whatever you want," you know, I think they're making a really, really, really big mistake until we see some degree of follow through here. And where could that follow through happen? Well, that follow through could happen with the close of about 3,400, with the break of the moving averages later on today or tomorrow. That follow through could happen on Apple getting back above those price thresholds. And so we're in that moment of time where something really, really good can happen, but we're just not there yet. I still think we need to see that 1 day, you know, follow through, showing you the conviction of the marketplace. Because I think with the increasing volume over the last 3 days and the headlines out there, the steepest correction in the NASDAQ, the steepest correction in the NASDAQ, the steepest correction in the NASDAQ type mentality is spooking some of the investors, some of the traders out there. And so I think a lot of people are just waiting a little bit to see that secondary confirmation, and that's kind of what I'm waiting for as well.
Yeah, I mean, these are messy charts, aren't they? I mean, I was looking at, when you guys were doing that, and I was looking at that Apple chart you had up. I was just like, that's a messy chart.
Listen, it's not a clean chart on Microsoft. You know, we broke this down fairly extensively yesterday, but, you know, Microsoft getting underneath the 50-day moving average, it would take getting back above 219, 220, which is another 1 to 2 days for Microsoft. And then you're talking about, well, you're really close to that 232 level at that point. It's hard on Microsoft to kind of map that out. Apple, I think, is a little bit different. You know, you stayed above the 50-day moving average. You stayed within that bull range. You know, confirmation could happen a little quicker on Apple above that 220 level. When you're looking at Amazon, as we broke down yesterday, you know, a little bit of a fake out type scenario. I wasn't nearly as excited about Amazon as some of the other ones. You know, Facebook was setting up, I think, and still is setting up. You got a hammer candle kissing off the 20-day moving average. If you see some degree of upward movements in price, you can map out a positive trade right there above probably 280 on Facebook. Netflix, you know, is in some degree of neutrality craziness. So I certainly agree that with the market doing what the market has done in the last 3-4 days, it's created a very messy environment. And this is what I talked about last Friday, is if the market would have held that 3,400 level instead of that another 1 to 2 days down, you would have had a lot better, a lot cleaner charting environment to really kind of map that out. When it breaks that momentum type analysis that has been dominant in the marketplace over the last, you know, really 40-45 days in the market, it creates that messy trading environment where it's a little bit more difficult than those textbook retracements we probably would have had if the market would have held on Tuesday.
Yeah, obviously, I think that did change the setup quite a bit. Yesterday, I did bring it down to where the depth of the retracement makes it so it's not clean on the swing trades. There's a lot of great opportunities. There are some clean charts out there, by the way. I mean, Disney looks like a nice little breakout developing. There's areas of the market that may be a little cleaner, but this deeper retracement is just what it is.
And Tim, I agree with what you just said. There are clean charts, but this marketplace, even though the trend of the broad market has been fairly consistent and fairly bullish, I don't think there's anything abnormal about what I'm seeing in the individual components. The individual components of the market have not been nearly as consistent as the overall broad market has.
So maybe we can get back to markets
Well,
where
it's been a stock picker's market for how long though, guys? It's been a stock picker's market for 4 months.
Yeah. Well, at least since April. Yeah, I would agree with that.
Yeah, it's been about 4 months.
Yeah.
All right. So one of the big questions on my mind today is like that intraday support. You know, when I mean, can you pull up a 30, 15-hour chart, whatever you want? Like, I mean, it's what we saw in gold for the last. We had the shakeout couple days in gold, about a month. This guy's been a little bit more than a month now, and then we had just multiple tests of a support level along the way. I mean, are you going to be able to trust this until you get that like multiple test of a support level that shows that there's just that line in the sand? Because, you know, it's been like this quick rally today where we didn't have that multiple test of a particular support level. I mean, at what point do you trust it again, as far as, you know, just
as far as putting new capital in, Mark, or trust?
Well, yeah, I mean, just like I mean, because I mean,
yeah,
like trust.
Oh, I haven't trusted anything in the last 6 months.
That word's going to trigger us.
You trust price action when it's going crazy like this? Wait, what?
Like, are we talking trust fall here? Because no,
I am not trust falling and letting JP Morgan catch me.
I am not trust falling into Jay Powell's willingly, you know, arms. No, I'm not trust falling.
I will crush that dove.
Yeah, we would kill the dove. So no, I don't think I would. I trust it, but I think you have to trust your eyes. If you see a breakout and you see it close above 3,400 with some follow through, and we get another day of price action where you have some consistency on the intraday perspective. This to me was a little bit more difficult. This is one of those, you know, gap down, buy straight back up V shapes, right? On you know, what we've seen in the last 24 hours. It's hard to trust that because we didn't really have that slowing momentum. You didn't have that, you know, double bottom scenario. This was a bounce and just ran from an intraday perspective. But even though I don't think you can trust it that way, if you get another day follow through here and you have consistent higher highs, higher lows on the intraday 30-minute chart, I think you can trust that 30-minute chart until that 30-minute chart is broken, the same way we were trusting that 30-minute chart throughout the entire 40 days of, you know, price appreciation. And so, no, on the daily chart, it's going to look crazy train. It just is. A lot of those daily charts, you know, look nasty from a volatility perspective. But in the marketplace, if you do see that one, another follow through day tomorrow on Thursday, then yes, I think you can trust it once you have clear intraday trend moving in your direction. Which would coincide with confirmation above yesterday's high, coincide with confirmation above, the daily moving averages, specifically in the S&P 500 as well. So if you see that 30-minute chart continue to confirm, you're going to get back up above these levels. That little pinch there you have on the moving averages right there at about 34.35. And then if you can reclaim that 34.45 level, which is really kind of coincides with the high of yesterday at 34.47, I think at that point you got a lot more clear air above that level, 40 points up from now than you do today. So, I didn't see that, Greg, but 34.50 makes a lot of sense to me. If you have that intraday trend on the 30-minute chart, shows some consistency without violations of support, that 34.50 number, you're reclaiming a lot of overhead intraday resistance. And then there's really nothing on that intraday before it starts flying back up to the 3600 level. So to me, I like what Greg said. 34.50 makes a lot of sense. Couple that with a consistent intraday trend in the next 24 hours. I think at that point we can have a lot more trust in what we're seeing.
Yeah, 34.50 give you that triple whammy, those moving averages, daily confirmation, and the intraday resistance like you're talking about. I think that's a good level for sure. Trust, though, I'm not sure that's the word I
would.
Well, one last thing
on
this.
Not the word.
See, this is what, like, if I could get the pattern we had after the last shakeout in early June, where you had that couple little days down, big, huge shakedown day, and then they had a lot of volatility the next couple of days. If you remember right, that original shakeout day came on a Thursday as well, and then Friday, and then overnight gap was down, and then it rallied for a couple days, and then it traded sideways for a couple weeks, retested those lows, and then formed a nice breakout level. Boy, I would love that pattern to develop.
I think that would be a very, very strong pattern, Mark. If you saw it, because I don't think we're going to V-shape here, and just bullish retrace all the way back up to the highs. And, we are coming through a fairly significant downward movement in price the last 3 days. I think a V-shape would be very, very, not even trusting. I think it would be very, very hopeful for that. I think it would be a lot better trading environment, or a cleaner trading environment, if we did get something similar to what we saw in June of this year, where you had this support, the support zone right there at the 200-day moving average. This time it's the 50-day moving average. You have that follow through 2 to 3 days, and then you kind of stagnate over the next, 7 to 10 trading days. Let it consolidate a little bit. Let those, moving average consolidate. Let those indicators consolidate. Let it get undervalued in comparison to its performance over the last, month or 2 months, and then you're off to the races. I do think that is a pattern that certainly should be traded by everybody, and it's a pattern that I would personally like in the market. There's nothing wrong with giving the marketplace a 7-day consolidation range and then letting it break out and run on that. So I would like that. But the one thing, a little bit of cold water here, guys, and not to throw cold water just to throw it, but if you don't follow through here, Mark, in a V shape, and if you don't get the consolidation like you're talking about, and that 50-day moving average is broken after a rally, I think the thirst for risk is going to dissipate real fast.
Yeah, I agree with that as well.
Real
I think
fast.
the tone of the market right now, this pullback, whatever, correction, the fastest correction of all time, that's fine for those retail investors, a lot of risk on appetite investors, as long as the markets go back up. But if you see another leg down, that changes the narrative that they've been operating on for a long time. I do like the comparison to gold that you brought up, Matt, because I wouldn't mind at all to see this market churn for a week or so, just like we saw gold. Now it's been a month after that swift sell-off to where it's been churning. That's healthy price action, in my personal opinion. Gives me a lot more confidence in approaching a chart. If now the S&P doesn't have to churn for a month, but give me some back and forth, I think would actually, I would prefer.
I will tell you though, Tim, if the S&P churned for 3 weeks and it held support right there at 3,400,
yeah,
I would have a lot more quote unquote
it.
Trust in that market than I would in this market.
Yeah.
Yeah, I think it would be like, if you could see that gold pattern in some form, and then had a breakout, I mean, that would be a really, really ideal, perfect environment. Now we don't always get what we want ideally, right? But you don't have to trade what you don't like. I mean, that's the beautiful thing. I mean, one of the biggest powers we have as individual traders is no one forces us to trade every day. No one tells us what direction we have to go. I mean, we have total control of when we enter, how much we enter, how we approach, and you can patiently wait for what you want. I mean, I think, I mean, and I fall into this, I'm sure you guys do too, and everyone does. It's like, I got to do something today, no matter what. There's nothing wrong with just, you know, Greg and Matt yesterday talked so much about patience. So much about patience.
What was the
There's
quote
nothing
you
wrong
gave
with that.
Matt from one of your mentors? You don't have to make back the money today on the money you lost on that one trade or something like that.
You don't have to make back the money you lost on the one trade in the same trade or the same time frame.
Yeah, it's true. I mean, you don't have to trade every day. You don't have to overshoot it, and you can wait for your price confirmation to develop.
No, oh, go ahead, Tim.
No,
Sorry.
I was just going to say, I mean, and that's the beauty of the marketplace. I mean, if it does confirm tomorrow, there's going to be great opportunities. And if it doesn't, it churns for a week or two, there's going to be great opportunities. That's one thing I love about the markets. You don't get to choose the market conditions. You got to trade what is put in front of you and react and respond.
I personally always love the metaphor that trading is like fishing, where, I mean, sometimes you'll have that fish on the line and, you know, you're fighting it and it gets away and oh crap, or, you know, maybe you even get the boat and it jumps out or whatever. Maybe you lose. Maybe you're sitting there for hours before you finally get a nibble or a bite. But if you don't have your line in the water, you're not going to catch anything. But you have to wait for that opportunity, and then you reel it in. Then you make the trade. Then you trigger in. Because to me, that's really what trading is. If you're trying to force it every time, you're not going to catch anything.
Are you a good fisherman, Cody?
No, I suck at fishing. And the reason I would say I'm not a good fisherman is not because I can't catch anything, is because fishing is about the patience. If I haven't caught anything in an hour, I'm packing up and going home.
You got to bring your trading patience to your
Isn't that where the beer comes in, Cody?
Yes,
Cody.
Actually, the greatest fishing trips are the ones where I go out with my buddies. We take some kayaks down to the Gulf, and we're there for an entire weekend camping. Because then it's not even really about the fishing; it's about the friends.
Listen, I hate the analogy. I hate the analogy, and the reason I hate the analogy, Cody, is I am probably the world's worst fisherman. Like, I'll throw my line out there, I'll be patient for 8 straight hours, and I won't even get a nibble.
I'm only as good as the
fish
people that
hate
I go
me.
With. So.
I think
Cody,
that's
okay.
I think Cody should be required by halftime report law to give one good old boy country analogy a day.
Cody's
like, cause look at him. He just
so
delivers it. Like he
misses Texas so bad.
That I
do. Good old boy country analogy today. And if he could do it in a Texas drawl, that would be even
Cody's
better.
been in paradise way too long.
I could bring out some draw if we need to.
Yeah.
See, I like that. I need more of that.
Yesterday we were talking about the Bowie knife, and today we're talking about some fishing.
I love it. I love it. You should just walk around Hawaii streets and have those conversations. You will literally be the most.
Oh man, I'll tell you what. I'll tell you what. Whenever I greet someone here in Hawaii, and I just say howdy because it comes out naturally. That's how I say hello to people. I usually get a cross-eyed look. They're just.
Ryan Franklin says ice fishing keeps the beer colder. I agree with that.
I like it, Ryan. I'm with you.
And I saw your picture up there in Wyoming. I think you keep the greens on one of those golf courses. Looks like they got snow for the first time. The weather's been crazy around the Mountain West here recently.
He makes me want to golf every single day.
Every single day.
Every single day I see his posts and I'm like, man, I want to be on the course now.
Cody lives in paradise, but Ryan is paradise. Like he's just sitting there on those golf courses, and I'm just like, oh, that is so beautiful, so beautiful. I'll tell you, Cody, you just made me miss Texas. I miss Texas. I need to get back down.
Well,
I need me some good old country Texas.
Yeah, come on down.
Speaking of Texas,
there's only one place I like more than Utah, and it is Texas.
Texas is great. Actually, I've got mixed feelings about Texas, but we'll leave those on the table.
I got mixed feelings about Houston, but there's more.
I got mixed feelings about Tim. He's talking about Texas now.
Me and my Texans. I know it always
calm down.
Riled up.
That is the wrong demographic to get after this.
Listen, I don't bash Texas at all because my favorite story in American history is the Alamo. I can watch any Alamo movie at any time. It always fires me up. So always makes me feel patriotic. So, and
right.
Texas,
watch
the Alamo.
Texas Rising. Watch that show. It's a TV show.
So, you know, you say bad things about Texas, Tim. I'm going to take Cody's side.
No, San Antonio is a wonderful place. I loved the Alamo actually. And when my daughter was there, it was always a fun place to visit. That's one of my favorite cities, no question. Speaking of Texas, their senator, Ted Cruz, actually talking about markets, talking about stimulus.
Oh, look at you. Look at you growing
Look
up.
at that
in Texas.
transition.
Oh,
Cool.
look at you. I'm so proud.
I love the golf clap. Makes me so happy. Oh, we're tying it all together today. Ted Cruz came out and said there is no way they are passing stimulus before the election, Mark. Now, this is one senator's voice. It feels like a very honest, direct voice. I don't think he's trying to play politics on this one. I think that's probably accurate. I think that's my assessment of it as well. Do you agree, Mark? Do you think there's any chance we actually get a stimulus bill done?
Well, listen, we have been saying on the halftime report for 5 weeks that the longer, I mean, not even 5 weeks, clear back before August, that when this stuff is like, we bet on the House that the stimulus bill would pass because that's normally what happens. But as that started bleeding into August, you know, we were pretty adamant here that, hey, listen, if the longer and every day this goes, the likelihood of this happening goes down and down and down and down. I think Ted Cruz is just reading the room and reflecting that you just get too close to an election, just not going to happen. And the market still thinks one's going to, right? The market still thinks one's going to. And to be honest, all of those nice earning reports that we saw this last quarter, without a stimulus, they're not going to look so nice. And that is just the mathematical facts of it all.
Mm-hmm. Maddie, what was the last House proposal you were talking about in pre-production? There's some 500 billion.
No, it was the Republican Senate.
The Senate proposal.
They're talking about a scaled down version of the original proposal. McConnell has no intentions of that actually becoming law, nor does any other Republican senator. And quite frankly, I don't think the Democrats are willing to play ball there either. I think politics, I've said this before in the halftime report, politics is taking over. And when politics takes over, that is not good for Americans. That is they are playing political games with that. And so I don't believe, and I haven't believed there's going to be a stimulus for quite some time now. Ever since you removed the deadline on August 30th, what was the incentive for either political party to come to the middle? They're both trying to get political wins here. Neither side's going to allow the other side to get a political win. It's not going to happen. And I'm not throwing shade at one party or the other. I'm throwing shade at both of them simultaneously. It is not going to happen. Anybody that understands the history of politics knows this last 2 months, unless there's something historic happening, which there kind of is, but unless something grave happens, you just typically don't see politicians come together to try to do something outside of, say, the 9/11 situations, outside of the subprime market crisis. But outside of those two instances, I don't remember an environment in that last month to 2 months of the political season where Republicans and Democrats, try to do what's best for the people. They try to win elections. That's their job. Their job is to win elections. And so let's not be shocked when they do whatever they can to win an election, because they're not thinking about, what's good for the American people in the next 2 to 3 months. They're thinking about, well, what can I do for the American people in the next 4 to 8 years? That's what they're thinking. So right or wrong, that's where their mindset is. If we can get in power, we can do a lot of good for the next 4 to 8 years versus what can we do right now for the next 2 months. That's just their mindset from the highest levels of politicians. And so and they do that, and most of the time they do that because they think that's what is right. They think if they're in power, so it's very narcissistic of them, but if they're in power, they can do a lot of good. And so I just don't think any politician is going to do anything that remotely could be interpreted as a win for either side of the equation. The Democrats certainly are not going to try to give Trump a win coming into the last 2 months, and the Republicans aren't going to give the Democrats a win. This is politics 101. So no, I'm going to give kudos to Ted Cruz today. Good. Mm-hmm. Ted Cruz spoke the truth. He said there is no way we are getting a stimulus deal. It's not happening, right? Ted Cruz spoke the truth.
I respect honest and direct always. Yeah, I want more of that out of my politicians. So I do respect it. There's no question about it. Is there any risk reward analysis that would lead to it benefits one of them to actually pass the deal? I mean,
I think it benefits Trump.
Yeah.
I think politically it benefits Trump. No doubt about that. The president's the quarterback of the team. Quarterback gets the credit for when things go good, and the quarterback gets the blame when things go bad. President's quarterback of the team. President would get the credit for something positive. They get the blame for something negative, and that's no different than any CEO or any leader of any organization or corporation in the history of our country.
Mm-hmm. Mm-hmm. Yeah, and outside of stimulus, obviously, I mean, the ongoing conversations have been around, COVID, the vaccine, how it's going to handle in the fall. Second storyline I do want to talk about with broad market analysis is the AstraZeneca setback. And Cody, if you can come on in here for a minute. Matt, you said something in pre-production I can respect quite a bit. I'll take a vaccine when Cody tells me it's safe, and
I did.
I thought that was point on. I mean, that's why you got a Cody in your life, right?
Well,
people you can trust that know the data and actual scientists. So
listen, I'm going to tell you right now, and this is just me talking. This is just my personal belief system. But there is zero chance I'm putting a needle in my baby's arm from that any politician tells me it's safe. I need medical type. I need doctors to tell me it's safe. I need people that I trust to tell me it's safe. And Cody is the number one person I trust for that. Okay, Cody and I, obviously everybody understands our relationship, right? He's a good friend of mine. I trust him completely. Yes, we have our political conversations and we have our political disagreements, but it's because of the care we have for one another. And so I trust Cody. And when Cody tells me it's safe, then I'm going to say it's safe.
Mm-hmm. So Cody, what was this setback with AstraZeneca? I think these are pretty common things that happen in these trials as well. But I read the headline at first. And by the way, the market reaction was interesting with AZN. At first, the market dropped pretty sharply on it. It did recover a little bit here after the intraday, but we're not down all that much. We're only down about 0.5%. But what was the news actually, Cody, on there? And they had a leading candidate, by the way. This is one of the top candidates, I believe.
So they're moving into their phase 3 trial and they're starting setup, and phase 3 trials are when it starts getting larger. So like a phase 2 trial, you may have 100 participants or 1,000 participants. Phase 3 is when you're looking at, tens of thousands. And they were looking at 30,000 participants to get going. They hadn't finished setting up, but they had started to actually implement the trial. Now, when you do these type of trials, there's always going to be side effects that need to be tracked. So when I've worked on a phase 3 trial before, and you always have to look at what the patients are telling you. Sometimes you'll get things that don't really matter, like, oh, I took this and my tongue felt funny, and you can count that off. But when you start to see a pattern of some of the larger effects, then you get worried. Or if you get a detrimental side effect that was, straight out of left field, and that's what happened here. They had a patient present with transverse myelitis. Fancy term just means swelling of the spinal cord. So immediately they hit the pause button. They hit the stop button. Like, that's a big deal. They need to figure out whether or not that's vaccine related or whether it was, an outlier. Is there a correlation? So the more I dug into this, I think the reason the market's not completely selling off is this is actually what should happen in a study. As much as they've been trying to push and rush and get this thing out the door, I actually like seeing that they hit the pause button. And I think the market's kind of reading the same way, because when you have an effect like this, these are the things that we don't want hidden under the rug. We don't want the scientific community trying to hide it for, say, political reasons like Matt was talking about. So they hit the pause button and they're basically saying, okay, we're going to dig back through our data, make sure there's nothing else we missed, and we're going to reanalyze to see if this has something going forward. And they're even bringing in a secondary statistician or statistical company to also look through their data. So this is a good thing, but it's not necessarily good or bad. Let me say that, is the fact that this is actually the scientific process. This
Sounds
is
like
why
the normal,
this is why it normally takes 5 years to 10 years to get a vaccine out. So I like hearing that they're hitting the pause button when they have something that worries them. Mm-hmm. What I would be scared of is not hearing about a pause button being hit and the vaccine comes out next month. That would worry me more. But as of now, they need to figure out whether or not this swelling of the spinal cord is due to the vaccine or whether it was a random freak event with the patient. Because when you get 30,000 participants, you're going to have some things that happen, even if they're not vaccine related, but you always have to dig down and figure out, is this a correlation with the vaccine given, or is this a random event, and is there statistical significance?
Mhm.
So right now, based on what's come out, and this is fresh news, is that one patient was hospitalized after receiving the vaccine with that swelling of the spinal cord, and they said, stop everything. We need to dig into this. So that's good. And I think that's also why AstraZeneca is not selling off like rapidly, because that's a good thing. That's what I want the scientific process to do. I want them to dig into the data. But
Mhm.
overall, they don't know when they're going to relaunch the phase 3 trial. But I was looking into the vaccine, and it's actually interesting. They're not just going at COVID. They're actually trying to make this vaccine all SARS related, because COVID is a subset of SARS, where this particular vaccine, they decided not just to go for COVID, they're going for the entire family of SARS viruses, which is pretty bold to do. But I think it's also, I mean, they're swinging for the fences here.
Mhm.
So we'll have to see where this pans out, because if it ends up just dead in the water based on this particular patient, then it's dead in the water. They got to start over again.
Mhm. But I am encouraged at the fact, like you were talking about, it sounds like a natural part of the scientific process. And
Yes.
obviously, we want science to work itself out correctly. Mark, these are stocks that you track, at least from a news perspective. Is there any play on these vaccine candidate stocks? Is there any way that you would approach them, or are you? And you're on mute for a second there, but are you staying away from them? How are you approaching these kind of candidates?
As I'm mute because I was eating chips and I didn't want anyone. I don't, nobody likes to hear somebody
No
eat
problem. No
chips in
problem, brother.
front of them.
Yep.
I don't trade the specific stocks because the last time I checked, we have over 160 vaccine candidates out there at different stages, different progression. There will be vaccines. There will be maybe a big winner in the whole thing, but trying to track that horse race of 160, not betting on any particular company, just following the general trend of it all, and it keeps progressing. Every week you have another vaccine in another stage, and there is this, think of it as like this massive just push against a wall, and every week it push that wall back more and more and more. So great progress is being made on the vaccine front. Which specific one is going to win, I have no idea on that. I just know that overall there's been great progress made.
Obviously when the news headlines come up, I'll pay attention, but these aren't companies that I'm tracking on my short-term watch list. Let's move on here, Maddie, and let's keep working through the markets one step at a time. We talked about the crude oil breakdown yesterday, pretty sharp sell-off. Oil inventories usually come out on Wednesdays. With the holiday, they don't come out till tomorrow. Not like they're going to make much of a difference anyway. Crude light, little green candle, trying to rally back, Matt, but these almost feel like setting up maybe even a bearish retracement type pattern very early for that kind of thing, because we don't have a downtrend. But how are you reading that chart there, Matt?
I'm seeing this as the beginnings of the first bearish retracement. And if we do get a bearish retracement into the 40 handle with a little bit of slowing momentum, I think it's shortable.
Yep. Yeah. That pressure with the volume and all that. I mean, Mark, the news yesterday, I want to get one thought on it. I don't know if you actually have clarity on it. Was Saudi Arabia just pricing lower for October, or did they signal for later months as well? Was this a
I believe it
short-term?
was just for October, but that's what started the whole mess earlier this year too.
It was a catalyst. Yeah.
Yeah, and once again, I mean, that was a legitimate catalyst. And so I think Matt's analysis, if you get a normal technical reflection and classic bearish retracement, come into those falling moving averages, get your signal, I think Matt's absolutely right. It's worth a swing trade short.
Yeah. Yeah.
Well, anybody who has watched the halftime report at any point in the last 2.5 months should have known what I was going to say before I said it there. I've said very clearly that a break either way, in terms of the initial break, it probably is a stay away. It could have been fast. You could have missed it, could have chased it. I just thought it was a stay away. But that first retracement, whether it was a breakout to the top side of 44 or the breakdown to the bottom side of 40, I do think that first retracement, if confirmed, certainly can be traded.
Yeah. And that's that patience you were talking about, just from a chart development standpoint, no question about it. And we finally did get the break.
Crude. Anybody that actively trades crude, you have an A+ in patience rating right now.
There's no question. No question. Gold, we already looked at the chart a little bit here, Matt, but if you want to unpack anything you're seeing there, I'm also waiting for another pivot trigger up above that 2000 mark, but I love the support holding here. We already talked about it. Anything to add
Well,
there?
no, I mean, the only thing to add is now, the length of the consolidation has allowed the 50-day moving average to catch up to price action. And a lot of times when we see this type of consolidation after a blow off top, those moving averages catch up to it, can be a catalyst to the top side. And so, it just adds another layer of support right there at that 19 to 1920 level that can add to the support bounce, driving gold back up. So, the analysis is very, very similar to what we've been seeing over the last few weeks in gold, both on the weekly chart and the daily chart. But now I think it just adds a little bit more in terms of that support bounce type methodology with that 50-day moving average right there as well. I mean, guys, that 50-day moving average, when you're looking at this, not so much from a gold perspective, but when you're looking at this from a broad market perspective, one of the reasons why I feel this is such an important moment for the market in the short term is because of the importance of that 50-period moving average. You tested it multiple times right here and here. You finally broke out of it in April. You retested it very quickly there. But coming back a little bit of time frame here, when you had the market leading into the drop we saw in February and March, you had that first test of that 50-day moving average here that held initially, same thing there. But when you break that 50-day moving average, there's a lot of evidence of it retesting that 200-day moving average. You look at it right here, when it broke it, the distance between those two, one of the reasons that felt so painful is because you had a lot of distance between those two moving averages that are very important to the position trader analysis, the investor trader analysis. When you broke it here, there wasn't a lot of distance. And so nobody really talks about that, October type of violation, because look at the distance between the two moving averages and where did it find support? Right there at the 200. But now, because of the melt up you've had, you have quite a bit of distance between those two moving averages here. And if you do violate that, yeah, you do have some historical resistance and some historical support zones right there in that 3,200 range, which certainly could play a role. But the likelihood of it coming all the way down to retest that 200-day moving average increases dramatically if you do have it. If this buying, that we've seen so far today doesn't see follow through, and you eventually see a violation of that 3,300, that 50-day moving average, I mean, it could get ugly in the short term, guys. There's no doubt about that.
Yeah, those key locations definitely. We got to keep watching them, because you're right. If it does not hold, the ugliness can happen pretty quickly. No question about it. Quick peek at the dollar and then Bitcoin, if you can here, Maddie. Holding pretty much. I mean, there's not much in the chart. Dollar holding resistance, just right up there, bouncing against it. And
Does
holding 10K.
Guys, one thing, I mean, we've talked about strong earnings, right? We've came through some fairly good last quarters of earnings. We've talked about stimulus. We've talked about how stimulus has aided into those earnings numbers. But guys, hasn't the decreasing dollar in the last 6 months also played a significant role in exporting and the profitability at these companies?
Yeah, for
It doesn't hurt.
multinationals, for sure. Yeah.
Okay.
I mean,
So
it doesn't hurt at all.
There's probably the weakness in the Russell too, relatively, Matt. That's why the Russell hasn't performed as well. Yeah.
if the dollar starts to reverse the trend, because you're seeing reversal characteristics at this point, guys, you're seeing slowing momentum, double bottoms. You now got double top scenarios. You're looking at this from a head and shoulders perspective, an inverted head and shoulders, maybe a W formation if we see a retest to 25. But if you start, if you take away the stimulus and the dollar starts appreciating here, one of the reasons it would is because you take away the stimulus. All of a sudden, the dollar starts appreciating, putting even more pressure on those corporations. It could get ugly in the fourth quarter if that happens.
Yeah.
No stimulus, increasing dollar, increasing risk. It's just it's not something I'm overtly concerned with yet, guys. It's just something that's kind of off, I'm starting to consider that.
Well, traders do that though. I mean, traders try to, kind of really think about the themes that might develop, even if they're not currently going that way, Matt, because those are the things that can dramatically change your market rankings. Right now, markets are bullish. And so part of the exercise is, okay, what would have to happen, or what could happen, or what could a catalyst be to create some instability? And a strong dollar, no stimulus, and, even some
A
political
strong
infighting.
dollar and no stimulus and economic concern.
Those
It's
are,
starting to creep into my analysis a
yeah,
little bit. It was a lot easier in the stock market when the dollar was just getting pummeled.
Yeah, yeah, and it's this momentum change is legitimate. It's been happening for a month and a half. You have to call it a momentum change, and rolling in. I'm not saying I'm bullish on the dollar yet. I don't think you are either, but just kind of those subtle changes, they start to get creep into your brain. No question about it. Bitcoin, Matt, holding 10K. I don't see anything we need to update really there. If you want to pick the chart, you're more than willing to. But I do want to get into individual companies here today. There's only a couple that grab my attention that we have to talk about, but there's still a lot of good charts. Actually, I had 7 charts I did want to highlight from this weekend's reports on stuff I think is setting up nicely, that are in some pretty good retracements, and like you said, stock pickers market. But let's start with earnings if we can. One of our old favorites, one of, in fact, a dirty sexy money candidate, and a
It
stock
is a
that
dirty,
we
sexy
like.
money candidate.
Slack, Matt, Slack, you would think in an environment like we're in would blow the doors off. What happened? What did you see? What was your reaction?
I mean, thinking about the last 6 months, and with hindsight, right, being 2020, you see all these pandemic plays, the communication plays, the Zooms of the world. If there's one thing that is more surprising to me than Slack not being, not graduating into that Zoom type class, right? That is a little surprising for me, that Zoom, outside of this, that early pandemic euphoria when it went from 22 to 40, which was kind of consistent with what we saw in Zoom and some of the other plays out there. After that earnings report last quarter, it's never been able to recover. Once it lost its shine, it just never recovered to the same degree that other stocks have. And what is amazing to me, and yes, maybe I'm talking my bias here, but because I like the company, but I've seen these earnings numbers, guys, in the last quarter get just gobbled up. Slack didn't have a bad quarter. Now, did they have a robust blow off your doors Zoom, 355% increase in revenue year over year quarter? Absolutely not. They didn't. But they came in above EPS numbers. They came in above revenue numbers. They reaffirmed guidance, and they increased year over year, quarter to quarter. I think it was 48.9%. So they came in at 215 million in revenue versus the 208 expectation. They came in at a 0 EPS number, which means they broke even on earnings. The expectation was a loss at -3%. And again, in this environment with the with Zoom's earnings report being so fresh in people's mind, yeah, it's like, well, they didn't Zoom it. Well, no, they didn't. Nobody did. But I've seen a lot of companies get gobbled up with these types of earnings numbers. But Slack is just, I mean, they have, and I think, and I put this on Twitter, but my initial reaction was positive numbers, positive report, positive that they reaffirmed guidance. But I think the concern is, and the concern I know other people have in terms of Slack, is not the quality of Slack, but the quality of the competition. And so I think if there was one thing that we can take away from Slack's earnings report, is that growth is going to be a concern for this company, not because of the quality of it, but because of the quality of the competition that has been increasing. So Google, Microsoft, the big dogs of the world out there, they're keeping this little man down a little bit, and understandably so. It's going to be a space of substantial competition. So to me, it removes a little bit of shine from Slack, no doubt. It's probably a stay away at this point until we see it shake out. But when the market, when it has not performed with the market for the last 2 months, 3 months, and then you get an earnings report that you've seen get gobbled up by other companies, and the market sells this one aggressively. Slack is not a darling in any capacity. It's not even liked right now. It's like it's in isolation and got exiled from all the other pandemic stay-at-home type plays. So it's an out for me at this point, and probably unless we see some type of reversal of fortune, we'll probably remove it from the Dirty Sexy Money list. I won't do that until 2021.
Yeah, I think obviously we're gonna have to see the fourth quarter and all that kind of stuff.
The earnings were fine. I do not remove companies from an earnings perspective just because of one, market reaction type. I want to see how it performs over the next quarter too. But it's lost a little shine here.
There's no question about that. I mean, they're just not growing at a pace that you would expect compared to what other type of companies that have benefited from the lockdown and all of the things that are happening in 2020 would have. The end of email, Matt, was a big promise from Slack, and that's one of their big directives and initiatives, those direct conversations that are happening. And they are seeing, increased performance in that, but it's not leading to the kind of revenue that they need right now to even, number one, turn them profitable. They did improve their guidance moving forward. I mean, there were some things in here I liked.
It was not a bad report. Yeah. In fact, I would put it in, it's not a great report. It's not a bad report. I would put it into if we were ranking reports like we rank technical type charts and trends and momentum, I'd put it at a +1. I think it was a positive report. I mean, they beat on EPS numbers, they beat on revenue numbers, and I got them reaffirming guidance, Tim, but I also got them doing the one thing that drives me nuts is they kind of changed their guidance by a couple pennies and call it increasing guidance just to get it into the headlines. I'm like, that's not increasing guidance, guys. That's just cheating the system. But so I got it as a fairly decent overall report. But the market has not. The market was expecting something along the Zooms, and when you have Zoom, who Slack has been compared to, when you have Zoom going up 350% in terms of revenue year over year, quarter to quarter, 48.9 doesn't seem very much. In a normal condition, guys, you get a growth company going at 48%, you're celebrating. You're celebrating. But this is not a normal market condition.
They only added 8,000 paid customers. I mean, that's one of the problems with their model is they don't convert to paid, They
don't convert the paid.
Yeah. People are loving the product. And by the way, that is number one thing. People have to want and love your product. They still got a lot of potential long-term. I'm not off the
I'll tell you right now, we use Slack. That's how Tackle Trading does all internal communications. We don't use email. We use Slack. And I know a lot of other companies use Slack or something like Slack as well instead of email. But I like the quality of the product. Okay. But the quality of their free product might be too good.
Yeah, that's right.
I know that's weird to say. I know it is. But the quality of their free product might be too good that they just don't see the need to convert to a paid product. I think it's a very similar philosophy to what Dropbox has went through over the last couple of years. The quality of the free product is so sufficient that do you need anyone outside of massive corporations to adopt it?
Well, and they did a little bit of that. I mean, they picked up, I think, about 38 extra $1 million customers or bigger. So, I mean, that's where their opportunity for growth is.
Listen, I would pay for Slack. I would pay money from a corporation perspective to Slack that they currently charge for, that they give away for free.
Yeah, I agree. Their free product's amazing. People should try it. If you've never tried Slack, I think you'd have
Slack,
an eye opener.
Put all your money into cloud-based systems and let people store stuff there, and then you got a winner.
Yeah. The other one that had earnings here today, Matt, was Lululemon, one of our favorite retail type of companies. They can charge a premium and people tend to want to pay it. The market did not want to pay the price that it was at yesterday. Today, though, they did drop the stock here about 9%. What was the take on Lulu earnings? What were the numbers?
And Dan, I do agree with that, Dan. And it could be the opposite on that as well, Dan. The quality of their free product, maybe they need to make the quality of their paid product substantially better to make us want to go there. I agree that it can work both ways there, Dan. No doubt about that. I just wanted to clarify that with him because I do agree with him. In terms of Lulu, the numbers, I mean, the EPS revenue numbers, okay, 74 cents versus 56 cents on the EPS numbers. Revenue, 903 million versus 833 on the expectation. Growth, 2.2%. Lulu's a company I like. Lulu's a company I trust in the retail space. This feels like if this was, and I know it's weird, but if Lulu would have reported 3 weeks ago, I don't think it's down 10% today.
And so I actually think if Slack reported 3 weeks
I
ago,
don't
it would have been
think
down the
Slack.
same way either.
No,
Yeah.
if Slack reports before Zoom in a different market environment, before the cross comparison against Zoom, no, Slack's not down like it is either.
No, I mean, Lulu, what happened with Lulu today? Listen, Lulu's valuation was off the charts coming into this pullback, which is now what, 20% plus from the top.
Yeah.
So when you have, and we've seen this a few times in the last month, when you have companies at the top of the chart with frothy, ridiculous valuations, they better hit it out of the park like Zoom did for investors to get excited. There's not a lot of room for error. It doesn't mean Lulu's a bad company, right? Doesn't mean it doesn't have a bright future. It's just a question of valuation. It's just a question of changing momentum. When you get at the top of the chart, these type of corrections have been more frequent. Yes, and I have no doubt that the current market conditions are exacerbating everything, right? But still a great company. It just didn't deliver. You got to be Zoom at the top of the chart. And if you're not Zoom, you're going to get a little bit of correction. I wouldn't be surprised to see a trading range, something develop on Lulu, because people still love Lulu. There was nothing in this earning report that said, oh my gosh, end of the world for Lulu. It just really, really high valuations. It needs to develop a new trading pattern. And I wouldn't be surprised to see it continue. Eventually, it's very, very, very long uptrend.
I think it's simple. Well, I think exactly what Matt said a minute ago as well. I'm with you, Mark. But if this reported 3 weeks ago, I don't think you had the same market response. Just the nature of where we are today in this market.
People are jittery, right?
Yeah, I think so.
People are jittery.
Guys, how many retail companies have we seen in the last 6 months show positive EPS, positive revenue, and actually show an increase in growth and get beat up like this? It hasn't happened very often. I think this is one of those situations where Slack and Lulu, and this happens in the market obviously all the time, but it's just one of those scenarios where if they would have reported in a different environment, you would have had a different result.
Yeah, I agree with that. And it's not going to go off the long-term fundamental watch list. I think that people are going to have Lulu on and interested in. Might have just been a little profit taking, the current market conditions, red candle down here today. Those were the two big ones on earnings here. And, Mark, it's been an interesting theme that we've been watching: earnings responses. Before the last 4 days, we saw those big run-ups into earnings and then to gap out on them. Now you're seeing just ever subtle and very couple of data points where you're seeing different reactions. You were very interested last week in doing a data set. Are you still doing that research? Are you still going after that and trying to figure out?
Absolutely. I think it's absolutely still a real thing.
Yep.
I think it's an absolutely real thing. I mean, remember when the NASDAQ goes through the quickest 10% in correction, it's going to rising tide lifts all ships. An absolute tsunami is going to sink a few on the way. I think it's a real phenomenon. I look forward to the data on it.
Yep. One other company that grabbed my attention from a news perspective today, Matt, Apple Computer. Actually, I don't know if you saw this. This is the old reminder. And even Matt, you got to remind me of this sometimes. I get worked up over antitrust suits or whatever it is. I'm like, antitrust suits coming out. The DA of this state's going to, and it's like, these legal fights take forever. Epic Games sued Apple. I think it was a couple weeks ago. And today Apple countersued. And Matt, I don't know if there's a legal team that you'd want to, avoid more than Apple's legal team with the money they have behind it and the things that they can do.
Is there a team I would fear more than Apple's legal team?
I mean, all the big tech ones, but Apple would be right up there for me.
I don't know. Apple's up there. Maybe Bezos. Bezos is a killer.
Yeah.
I wouldn't fear Zuckerberg. He's cowardly.
Basically, the countersuit, and I think there's some logic to it. There will be a legal fight here. Says that Fortnite, Epic Games, you're trying to take advantage of the App Store.
Oh, are you kidding me?
$1 billion corporation
Tim,
that you pay your dues.
you better dig in for this one, because this one's going the distance. This one, this suit and the independent contractor suit out of California with Lyft and Uber.
Mhm.
And when I say this one's going the distance, guys, this is going federal. Right now, both are fighting in state courts, district courts. I believe both these suits eventually will be countersued and challenged in the federal courts. And I think eventually the Supreme Court might take up these cases, because they're so fascinating for what's going on in America right now with the changing of our economic labor conditions from a standard, type job to independent contractor status. And, with this, with all the hoopla from a political perspective over Amazon and Google and Facebook and Microsoft and, Apple, and the antitrust, concerns and the monopoly concerns. I just feel this is going the distance. And, for some people that is like, oh man, legality, so boring, terrible. I geek out on that type of stuff. I actually really enjoy diving into it. And, it's I support Epic Games here. But I loved what Apple lawyer said yesterday. It was fascinating. I chuckled, I laughed. I'm like, all right, Apple's got something to say here. No doubt about that. Here's Apple lawyers. Although Epic portrays itself as the modern corporate Robin Hood, in reality, it is a multi-billion-dollar enterprise that simply wants to let me get it right. I can't even read my own writing. Nothing for the tremendous value. Okay, so it simply wants to pay nothing for the tremendous value it derives from the Apple Store. And then they released how much money Epic Games has made from the Apple Store. So not only did they be like, all right, we get it, you're trying to be Robin Hood, you're not, you're a multi-billion-dollar enterprise. Stop comparing yourself to Robin Hood. It's offensive to everybody else who compares themselves to Robin Hood, not including the Robin Hood broker. So I love the statement. And then they're like, and oh, by the way, guys, Epic, you've made $700 million from the App Store. How in the world are you trying to cry, in your spilled milk and trying to claim your Robin Hood when you have a multi-billion-dollar valuation as a company and you have profited $700 million from the App Store alone? You're sitting there screaming about unfair and how unfair this and unfair that, but we had a service, we allowed you to use our service, and you made $700 billion using our intellectual property. I thought it was, give them an A+. They nailed everything they needed to nail. Yes, I do support Epic Games in this. I do think, these app stores and the importance of the app stores coming gives Apple a lot of power in negotiation. And yes, 700 million is like, for the everyday consumer, they're looking at that 700 million and they're saying, oh, cry me a river, guys. You just made all this money. So I think it's fascinating. I'm in. I might be watching court TV on
I'm pulled in too.
Violation.
I would love it.
Literally, like usually people watch court TV over like
murder trials and stuff. Yeah.
Murder trials.
Yeah.
No, I'm sitting there with popcorn watching the litigation of Apple and Epic. I'm in. I'm sold. I'm in.
Dude, I would watch the one over the Lulu or Lyft and Uber one as well. I think the independent contractor status is a fascinating conversation that needs to get settled, and we need some clarity on it from a societal standpoint.
What's Uber going to say? Cry me a river, contractors. You get no health care and you get no benefits, and you make less than the average worker in America. Cry me a river. Uber can't exactly do that versus Apple. Cry me a river. It's a different comparison.
They can't pull the Crimea River card. That is true, but
No,
fascinating legal theater, and it's going to take some time. I'm with you. They might go the distance. These ones might be Supreme Court cases at some point. All right, boys, that's what I've got.
I'm calling it. Unless there's a settlement, which can always happen. But from what I'm reading from Epic,
which one's more
they're
likely?
Diving in here, and also what I'm reading about Epic, they got some deep money behind them. And what I'm also reading about Epic is they got some political type favoritism here trying to go after Apple too. And so I think this is getting into not just the corporate arena. I think this is starting to get into the political arena as well. I think there's certain politicians that want to see this go the distance that don't, that you, and I'm not saying right or left. There are politicians that do not like the monopoly status that Apple, Amazon, Facebook, those companies kind of enjoy right now. And I'm not calling them monopoly. I'm just saying the monopoly status that we like to categorize them as. I just think it's a fascinating legal challenge.
Yeah.
Oh, Judge Judy on that, James, would be amazing. Judge Judy would be so amazing between the trial between these two behemoths of corporations. It would be fascinating.
I mean, I think one of the reasons I'm drawn to the markets as a whole, other than liking games and numbers, is I like the theater of all of this. I like the theater of this week of the Bulls versus Bears. I like the theater of Stanley Druckenmiller going on CNBC railing against the market. I like the theater of Washington and how it impacts. I like the legal battles. I mean, reality TV has its place. I got no problem with someone who likes reality TV. Man, the stock market is a great reality show. It's a great reality show that's going on back and forth, which you can bet on. I like it.
Tim asked me the question. Tim asked me a question last night. We were talking about something. He goes, "Why do you think people really like stories of true crime, serial killers, and whatnot?" I'm not going to go through our entire conversation, but I would say the answer to that conversation, Tim, is the same answer why I love the stock market.
Just fascinating.
It's the same reason why people like staring at car crashes.
There's so much, well, and even more than that, I think just the complexity of it. There's so many layers to this onion. There's no doubt about it. I'm with you.
Listen, we all have a little bit of a conspiracy theory in our heart, and if you do, you got to love the stock market.
Yeah, I agree. Guys, that's what I've got from
stock market's like reality TV and true crime all rolled into one.
And international politics and international diplomacy, because it's
got the Manchurian candidate in it.
You've got banking. You've got
you got the Illuminati,
old money versus new money, generational conflict. I mean, there's no better place than the stock market.
No better place than the stock market.
I love them. Any news that you guys picked up on, Maddie, that you want to hit, Marky?
No, I mean, I want to talk about the vaccine. I wanted to talk about the Apple, Slack and Lulu's earnings, and then obviously just the overall news of the day. But out of everything we talked about, I think the one thing that is really in people's minds right now, just not in Team Tackle, but everywhere, is this going to be that real bounce that we saw in recent retracements, or does this turn into something else? And as of right now, again, I'm going to say the same thing I said yesterday. You're getting what you want. You're getting what you want initially, right? But remember, every time I've broken down the intraday chart in the last 3 days during the halftime report, I've said that same thing. You're getting what you want if you're a bull initially, but you haven't seen the follow through of that. And so you're getting what you want right now. That 50-day moving average is holding right now. But one day doesn't equal confirmation, right? You're looking at a V-shaped recovery off of a gap down of the futures market last night, where the market really started trading bullish from the overnight actions, and we really haven't seen massive appreciation coming into the cash open. So you're getting what you want from the bullish perspective, but you got to see some follow through here. I think if we see that continuation on the 30-minute chart in that follow through, I think the more it does it over the course of these opens we see, because the stock market right now, guys, is not just the cash open. The stock market right now is very important in those Asian market hours. It's very important in those European market hours. Those hours are really where we see that follow through. And so, it's going to be important in this moment in time to be aware of 7, 8 o'clock Eastern Standard Time. It's very important to be aware, even if you're not awake, it's very important to be aware the following day of what happened at 2 to 3 a.m. Eastern Standard Time, because that's when the Asian markets open and that's when the European markets open. And so this market, has been growing into a global marketplace for a very, very long time. But I don't think it's ever been more important than it is today from this market representing a global trading environment. And so, yeah, we're getting what we want, We got to see that follow through. And we have yet, in these 3-day pullbacks, we have yet to see any follow through from the intraday perspective. The V-shaped recovery off the 50-day moving average is positive, but we got to see that follow through now.
Well, and you know, the thing about all of that, Matt, is understanding market context as to where and when you need the follow through on the broad markets. It helps you identify opportunities on your individual watch list. One thing I did this morning, and I'm waiting for these triggers. And I love that 3450 handle on the S&P that you were talking about earlier. I think that's exactly the trigger I'm going to be watching for. And if I get it there, it doesn't mean I'm going to go buy the S&P 500. There's a lot of great candidates from even the weekend reports that I'm still very, very much interested in. I want to flash through a couple of them. Look at Abbott Labs, ABT. I mean, it doesn't have to be all tech names these days. I mean, you can rotate off that a little bit. You're getting confirmation here today. Market confirmation even gives me that warm and fuzzy. Deer, DE. You know, this one was on the
Abbott Labs chart quite a bit.
And Deer, you know, pushing towards a breakout up there at that 220 handle. I think it's looking very, very clean.
Breakout 220, solid.
Nike, look at Nike today. You know, and these are not the big tech names we were used to talking about. Now you got a tight earnings on that one. You're gonna have to trade that one pretty clean. But I also like that potential breakout right there, Matty.
I kind of like boring trades though. Abbott, Nike, Deere. They don't all have to be Zoom and Apple.
That's right. That's
and
right.
Tesla.
Four
I kind
more
of
quick
like
ones.
the boring ones.
ALB. Oh, I like being bored and making money. That's one of my favorite things. Stay bored if you're making money, and
stay bored.
Avoid the craziness. Even Alba Marine. This was a stock report candidate. Not great options on this one, but good little pullback on that one. Expeditors, EXPD. Look at all these candidates from the weekend reports. I mean, just that little, you know, kind of flag pattern pullback, and even just one last one. One of your favorites, Marky. Cat breakout was clean and beautiful, but Freeport Mac.
Hold on Caterpillar, you know, very quickly, we did break down Caterpillar in the scouting report, and I don't believe we added it, correct?
No, we didn't have it this week.
It got vetoed. I actually was on the let's add it to the list. I liked the breakout here, and I still like the breakout, James, and I believe a couple other of you guys in the chat were talking about that potential breakout of 150 on Caterpillar. I do like it. I will tell you what got the veto here, and this is just subjective, right? Some people like it, some people don't. And the veto process of tackle trading is like, that's it. Somebody vetoes, we're done. The conversation's done. There's no other conversation. There's no, you know, somebody trying to convince. A veto is the end of it. If they don't see it, if they're not comfortable with it, veto stops the process. But you know, there was 2 or 3 of us that were like, yeah, that cat breakout, the cat breakout. But there was also 2, 3 that were like, well, I kind of look at the left side of the chart and don't get a lot comfortable. And it was more from a reward to risk ratio perspective, not the pattern itself. There was just some of the coaches that felt that 157 to 160 level was going to play a role here, and I do agree with that. And so the concern was you gotta be a little bit more aggressive on stop loss here. And you know, when you're talking, I mean, it kind of fit the same logic that of why we removed the entry stop target from the watch list, is that we just didn't feel our community was, you know, adjusting triggers and stop losses like they need to when things don't confirm based on when you're preparing something on a, you know, Saturday or Sunday versus when you're actually looking at it on a Wednesday. And so we just felt like it was a really good trade, but we didn't feel comfortable enough putting it in the report because the management of it was going to be a little bit tougher for you know, everybody. But I like it. I thought the breakout was solid there, and I liked what was happening. So to each their own a little bit on Caterpillar. I personally liked it. I still like it, although I do respect that 157 to 160 level, and I think you got to respect that 157 to 160 level. If you break out of 160, you're probably talking 170, 175 at that point. So I like it. I thought it was a fairly decent risk for if you could overcome that 157 to 160 level. Getting up into that 170 level in the short term isn't out of the realm of possibility here. So I liked it, but there is some left of the chart mechanics that are a little concerning.
No, and I think one of the things when you're looking at your trade setups around there, I think, and it existed before this tech sell-off. There has been this desire in Wall Street to rotate out of tech a little bit. Not that tech isn't strong and has a bright future or any of that, but the concentration in the indexes was so high. And I've heard the chatter time and time again. There is just a desire to rotate out of tech. And I think this recent thing, no matter how it plays out in the coming weeks, will only exacerbate that situation. So when you're looking to do trades out there, like, and if you hadn't learned that lesson, maybe you did this last time. Like, if you have all of your trades in tech, it's it's basically essentially one gigantic trade, more or less.
Well, yeah, you're basically trading the NASDAQ.
Look to diversify your trades. If you're an individual that only has 1 or 2 trades out in a given time, hey, no big deal. Find the best setups, do what you're going to do. But if you're the type of individual that likes to have a lot of trades out there at any given time, diversifying that trade portfolio, if you will, to not all be tech, not to be all one thing, I think will serve you very well moving forward.
Great. Did Tim just leave?
Listen, I've had internet issues all morning. I mean, for all I know that.
No, I was having a little cough.
I figured it was a cough fit. I figured it was a coughing fit.
If you didn't know what went on into Salt Lake yesterday, we had a massive windstorm. I'm surprised. I mean, power out in numerous parts of the city, hundreds, if not thousands of trees down. I'm surprised we're all here been able to do this morning.
Honestly, I think we live in 2 of the only pockets of Salt Lake City that actually kept power.
We got lucky.
It was nasty wind yesterday.
Yeah.
Oh, some of the pictures I was seeing, and again, where I live, it wasn't that bad, but some of the pictures I saw, it reminded me of like hurricanes coming through or tornadoes. It was nasty.
There were pockets of 100-mile-an-hour winds. So.
Yeah, I had a friend that lives up there in Salt Lake, and she was posting pictures of giant trees laid over in the.
It was a mess.
Oh, it was like, Cody, some of these trees are 50, 75 years old. They're massive. And they came out of the ground like it was nothing.
Was it just like a windstorm or like what happened?
Yeah, it's just wind.
Wow.
Just windstorms.
We can get nasty wind.
We can get nasty wind in Utah.
Especially in certain parts of our valley, Cody, coming across those salt flats and the Great Salt Lake, you actually have these little wind pockets. Up in Weber County and Davis County, Matt, I think they had the worst winds. 100 miles an hour at one of my buddy's house.
100-mile-an-hour wind and earthquakes.
Yeah, that's crazy.
Great place.
We've had, 2020, guys. I mean, it is what it is.
Utah is the worst state to live in the union. You want absolutely no part of it. Look at all the wind we get. It's just absolutely terrible.
Everyone stay away. Yeah, right. You just want to keep it for yourself.
Listen, Utah is the most beautiful state in the union. There's no debate.
I don't want one more damn person here.
You remember when I was riding with you, Matt? I was just dumbfounded by the beauty of the mountains and everything as we were driving around. I'm just like a kid looking at Christmas lights out the window, just like in awe.
Oh, Utah is an amazing state. Anybody that ever comes to Utah, they see the beauty of the mountains. They get up in those mountains, and it's so tight. It's unlike, like, Colorado's really, really beautiful as well, but it's kind of unlike a little bit of Denver. Salt Lake is just nestled right up against the mountains. I mean, you're 20 minutes from Park City, Utah, and Park City, Utah. Find me a more picturesque, beautiful area than Park City, Utah.
It's amazing.
Hey, and if you want a late fall vacation, and if you've never been to Zion National Park, literally, like, listen, come visit Utah. Give us your tourist dollars. We appreciate that. Zion National Park is a must. You got to put it on your bucket list. It's absolutely majestic.
Dude, I think
I'm not really an outdoors guy, and it's just a beautiful place to visit.
And the park systems could use it, by the way. I mean, they didn't get a lot of as much traffic, and I think they've got some revenue problems. So I do think they could use it. Maddie, take us out,
Brian,
of this thing.
Snowboarding in Park City might be not just snowboarding, but skiing in general. If you like the snow, I'm not a rabid snowboard by no means, but if you like the snow, the powder in Utah is comparable to anywhere around the world. It really is an amazing thing.
Steve, my buddy, your buddy, you used to always tell me that he had a statistic on snow and Utah that less than like 8% of the people in Utah have ever been skiing.
Oh no, more people that ski in Utah, they are not from Utah.
Yeah.
Skiing it's weird. I know it's so weird, but skiing is not that popular within Utah itself.
The people who love it the whole way.
Oh,
Don't
yeah.
get me wrong. We have
Oh, yeah.
beautiful slopes and all that kind of stuff. I actually go to the mountains and those ski resorts more during the summer when the prices are cheap and you can hang out for a week and get
Oh,
great meals and all that kind of
it's
stuff.
gorgeous up there.
Yeah.
It's gorgeous all the time around. And
And also, I just
obviously,
add how much further my golf ball flies with the altitude too. I
oh,
love
you
that.
stop that. I am so sick of hearing that from you guys. All of you guys that come from California and Texas and you come to Utah and you're like, oh, now I see why you guys hit it so far. Oh, yeah, go lift some weights and stop complaining.
I mean, there is,
I was
you're a
impressed.
data guy. There is science.
I don't
behind
care. I don't believe in that.
this. All right. All right.
Matt's just
Jeez.
upset when he does a short drive in Texas.
Listen, when I go 260 in Texas, you did something. You spiked the juice, buddy.
That's right. Let's wrap this one here today, boys. We always appreciate coming in, hanging out with the crew out there. We love you guys, Team Tackle. If you need anything at all, you let us know, team@tackletrading.com. Mark does a fantastic job helping you guys, responding and, running our customer service. We have 2 programming notes tonight. In fact, if somebody out there can help me and put these in the chat for me so everybody knows and we got clear information, at 7:00 Eastern, Coach Tyler, it's double dip of Tyler tonight. Coach Tyler's going to be teaching how he's finding premium in the options market right now in these market conditions.
With the architect.
Yeah, with the architect. That's right. And that is a
Tyler
wonderful
Craig, the architect.
the architect. I like that a lot. And then at 8:30 Eastern, Bear Market Survival Guide, which he'll be talking a little bit about how he fades the fear in situations like this, prepare for potential volatility. Perfect time for our Bear Market Survival Guide Mastermind group.
I
at
mean, seriously, you think
8:30
about the
Eastern.
double dose of Tyler, and Tyler is such a great hedger because he's a bull. He's kind of like
Yeah.
me in this like chronic
Oh, he's-
perpetual bull.
Is there
I mean,
more
he might
to
even be more bullish.
perma bulls? Yeah, I was
And,
gonna say you and Tyler are the perma bulls. Like,
We're the perma bulls at Tackle
yeah,
Trading.
you're the perma
and,
bulls.
and so I think that perma bull teaching, and I mean, a double dose of perfect market conditions, Bear Market Survival Guide, which teaches you a great system in which to make money in an upward market and protect yourself on the downside. And he's talking about selling premium in this market. I mean, it perfect shows for the perfect market conditions by the architect who, now it is seriously good programming tonight.
Looking forward to it. As always, any last thoughts there, Maddie?
Oh, now I'm just on ranking all the coaches from perma bull to perma bear. Like,
We got to give
like,
them nicknames first. We need nicknames for every
no,
coach.
like Tyler would be on the far right with Mark of the perma bull. I don't
Old
think we
Money's-
have a perma bear. We
Old
don't have a
Money's
perma bear. Old Money would be there too. Old
Yeah.
Money would be there too. Like most things in life, I'm the moderate of everything.
Mhm.
I don't think we have a perma bear.
No, we have more.
In fact,
people
I
that
don't
more
think I
bearish
want
tilted.
a perma bear.
I don't think we ever have, you don't want to be a perma bear in the market. quite
No, you don't want to be a perma bear.
If somebody-
That goes against 240 years of history.
There's nothing to support it.
We
Now,
have coaches that are more apt to take a higher percentage of bearish trades is probably the best way
Yeah.
of putting it.
yeah, as they swing in different market conditions. for sure.
Noah would be the closest one, Jonathan, to what you would consider a perma bear, but Noah's mostly bullish. Like,
Yep.
almost, even though he's like, he gets concerned about a lot of the bearish arguments, even at that, I mean, for the most part, he's a bullish trader. So
Yeah,
Yeah.
Noah's
perma
more
bear,
like
maybe perma bear in mindset.
Gino's a
I don't
perma
know.
bull.
That's it.
He'll
Gino's
hedge.
more on the bullish side. He'll hedge, but
But yeah. I mean, and
wow, the more I think, Tim, you might be the perma bear.
I'm not a perma bear.
I
can
know.
tell
I'm
you that.
kidding. I'm kidding.
I'm actually a perma bull.
I miss
the longer I
Timmy
trade,
Bear.
the longer I trade, the more I'm a perma bull, to be honest. But I'm more like Gino and you, where if the market conditions change, I'll short them. If the opportunities are on the downside, I'll play them. Frank is like that. Frank will play
Frank-
up or down. He could care
Frank
less.
is very
Yeah.
stoic about it all.
Yeah.
Like,
Frank's not a perma anything. He doesn't care that much. He's just a trader. If it's a breakout, he's trading the breakout. If it's a breakdown, he's trading the breakdown. He does not care.
All righty. We'll have to, let me think about that. Maybe we'll also, I'm looking forward to finding a nickname for every coach, like the architect and old money. Those are great nicknames. Guys, we're out here for today. We'll be back tomorrow, same time, same station. As always, whenever the markets are live, we go live and have some fun while we're doing it. If you've not done it yet, subscribe, click the bell, come back and join us each and every day. About a month ago, in fact, it's not quite even been a month ago, we hit the 10,000 subscriber mark. And we've almost got to 11,000 now. So we appreciate all of those new watchers.
You guys are the best. We
awesome.
love the team. Thank you guys so much. Appreciate that.
And if you're not yet a member of our pro community, we've got a pretty standard, simple offer. It's very straightforward. 15-day trial of everything we do on the back end of our pro community. Come and join us for our reports, for our webinars, for all of our content and courses that fit the pro member title. And there's a link in the comments below every show we do. We'd love to have you join us, and I know you'll love it as well. We're out for today. We'll see you guys tomorrow.